Tesla just reported Q3 numbers, and we're going to get into them here on the Investor Channel. My name is Colin. What is going on, investors? Hopefully you guys are having a wonderful day out there. On today's show, as I mentioned, Tesla numbers came in. They beat on that EPS side. They beat on revenue. And when you look at these automotive gross margins here in a second, you are going to absolutely fall in love with this company. Now, we are going to run through their entire shareholder presentation on today's show. I'll include a link to it in the description below if you want to follow along, or maybe we miss a couple things here on the video and you want to clarify those things on your own. I'll include a link to this. And then we are going to look at this stock from a technical perspective as well. I'm going to pat myself back as we join you from beautiful Las Vegas, Nevada. Not our normal setup here. Excuse the slight echo that we have in the room. But every Friday here on the Investor Channel, we recap all the major FANG stocks, including Tesla. And for weeks now, we have been predicting that this stock is going to march its way up to $900 per share. It's pulling back a little bit here in the after hours trade, but all things being considered from a technical perspective, still looking pretty strong over at Tesla. We will talk about that here in a second. Now, speaking of strong, flex your muscles right now if you've owned any Tesla shares over the last year, because it is up 100%. 100%. So when you hear people say, oh, Tesla's overvalued, oh, Tesla's, worth more than all the other car makers combined, it doesn't matter. The stock's up 100% over the last year. Take a look at this. Over the last 5 years, this stock is up 2,000%. So when you hear people whining and crying about the valuation and those types of things, and Elon Musk and whatever it might be, guys, the stock's up 2,000% over the last 5 years. If you own just one share of that, that has absolutely changed your life, and it certainly changed the portfolio, let alone if you had 10, 100, 2,000 shares of this, you'd be filthy rich at this point. That is why Tesla is an absolute fantastic investment. When we walk through these numbers, I think you're going to see this thing's got some room to run, honestly. Okay, revenues came in at $13.7 billion. That's up 56%. Put that in your pipe and smoke it. Ford, 56% growth year over year just on that revenue side. Now, here is where Tesla absolutely obliterates every competition that it possibly has. Even the upstarts NIO and Li Auto and XPeng over in China. 30.5% automotive gross margin. Hello, the estimate was for 28.4%. They're expanding margins. You're growing your revenue by 57% year over year, and then you're expanding margins at the same time. Hello, I'm in love. Ask me to marry you, Elon Musk. I'd probably say yes. Now, this doesn't come for free, okay? CapEx spending, that's the money that we have to spend building stuff, acquiring machinery. That came in at $1.82 billion. Expectation was closer to $1.4 billion. So we're spending money, but I tell you what, you're growing your revenue by 56%. You're expanding your gross margin. You can spend all the money you want. I'm super excited about that. And let's jump into the numbers. Let's jump into this Q3 update. Very familiar slide deck. If you haven't checked it out with Tesla before, I encourage you to look through this portion of their release every quarter. Now, this is a phenomenal quarter, and it comes with a variety of challenges, including, as we know, semiconductor shortages. Okay, get on the conference call of Ford and GM, and they're going to whine and cry and say, we can't get any chips. We have to halt production. We have to do this. We have to do this. We think it's going to last until 2023, 2024, 2025. Well, everybody's dealing with that, guys. Every not just car makers, TV makers, phone makers, computer makers. Everybody's dealing with that. Tesla's doing a nice job navigating through that. Now, they've also got congestions at the ports, okay? Tesla needs components and supplies and machinery to come in from other parts of the world. That is clogging things up as well, and also rolling blackouts, okay? This is the reason why I put solar on my roof over here in California. I'm not in California right now, but when I live in California, and as I do, I put solar on my roof because I sure as heck don't want the government telling me when I can have power. And so it's somewhat of at least when the sun's out, I'll have some power. Now, let's jump into the all-important numbers over at Tesla. These are fantastic, guys. Okay, so we've got our automotive revenues coming up here. That came in at $12 billion in Q3. You might wonder, well, where we were a year ago? Oh, just 58% higher. Last year, we had $7.6 billion worth of revenue on the automotive side. Now we're sitting at 12 billion. And here's even more important than that. Okay, 58% growth year over year. I think you'd expect with Tesla. Look at this. Last quarter, this is just a couple of months ago, we were sitting at $10 billion. And in fact, it kind of flattened out there. Q4, we were at 9.3. Q1, we were at 9. Q2, we ticked up a little bit to this $10 billion. Well, now you're sitting, that's like almost 20% growth. Just quarter over quarter, you grew to $12 billion. Now, what could be driving this? I think it's gas prices, okay? I drove actually down here in a Tesla to Las Vegas, and as we were filling up or charging the Tesla up, you could look at gas prices, nearly $6. Yeah, literally nearly $6 per gallon I look at premium because I put premium in my car. Premium gas is just absolutely ridiculous. And so it's no wonder that people are trying to switch to these cars, of which are regulatory credits. So a lot of people say, well, Tesla wouldn't be profitable without these regulatory credits. That's another like bear case. If it wasn't for the government handing them regulatory credits, which is simply a credit that Tesla has gotten for selling cars, selling electric vehicles, and then that they sell to other automakers because Tesla is kind of tapped out on that. Well, that actually declined. Okay, 30% year over year, but also quarter over quarter, we went from 354 down to 279. That is shrinking considerably, and the company is doing even better than it possibly can. Here was that automotive gross profit. It came in at $3.6 billion. That's up 74%. So you grew your top line by 58%. You grew your automotive gross profit by 74%. That gets us to this aforementioned 30.5% automotive gross margin. Hello, last quarter we're sitting at 28.4, and I was in love then. I didn't think Tesla could get any prettier and any more in shape and look even better and be even more attractive. And then all of a sudden they bumped their margins up over 30% in the most recent quarter. I tell you what, and they mention here, I'll show it to you in this slide deck, they say that they can expand these even more. Can you believe that? So we've got our total revenues coming in at $13.7 billion. That's 57% growth. We've got our gross profit coming in at $3.66 billion. That's 77%. Total GAAP gross margin, generally accepted accounting principles, coming in at 26%, a little over that, almost nearly 27%. That's highest that we have on record here and probably the highest that the company has ever been at. Now, we've got operating expenses over at Tesla as well. Look, this is not that bad, okay? Came in at $1.656 billion. Last quarter, we were sitting at $1.5 billion. Even in Q1, we were sitting at $1.6 billion, basically where we're at right now. Now, we grew at 32% year over year. We were sitting at $1.2 billion. We went up to this $1.6 billion. But look, you grew your top line 58%. You grew your gross margins by 308 basis points. Okay, so for operating expenses to only increase by 32%, you better believe if you've added all that up in your head, what has absolutely blown up over the last year? You guessed it, income from operations. Last year, we made $809 million. In Q4 of last year, $575 million. In Q1 this year, okay, just 6 months ago, we're sitting at $594 million worth of income from operations. Then it blew up in Q2 to $1.3 billion. And everybody was like, hey, this has got to be pretty good. Well, look at where we're at now. $2 billion worth of income from operations. That is up, just 148% year over year over at Tesla. Operating margins coming in at 14.6%. Guys, it doesn't get any better from this, from a lot of companies. Okay, forget the automotive. I mean, Ford and GM, we go through their financials here on the channel. It's a disaster going through their financials. This is an absolute dream come true. Now we've got some other numbers on here. Net income, adjusted EBITDA. I'm not going to waste your time with those. I don't think they're necessarily that important in terms of understanding what's going on over at Tesla. Now, some other things that have been going on over at Tesla is, look, their profitability was reached even after awarding Elon Musk $190 million in Q3. So they are rewarding their employees tremendously, particularly Elon Musk, and they're still hitting their targets. Now, let's get into the operational summary. This is where we see Model S, Model X, Model Y, total production, total deliveries, those types of things. Now, Model S, Model X, that is slowed down, okay? The chip shortage, in my opinion, has probably hurt that business more. And Tesla has been really focused on their mass market vehicles, which is the Model 3 and the Model Y. Far more affordable vehicles as well. Much more mass market for a $40,000, $50,000, $70,000 car than a $100,000, $150,000 car, whatever the Model S and Model X tend to cost. But it looks like things are getting back on track. Look, in Q1, we literally made 0 of these cars. That ticked up to 2,300 last quarter. Now we're very close to 9,000. Now we're nowhere near where we were in Q3 last year. In fact, we're down 47%. Now, what's humming and what's driving all of this at Tesla, and this is what should have you excited about Tesla, because they are continuing to release products that are underneath the Model S and Model X. Looks, anybody, I don't want to say anybody, but a lot of car makers can make a $200,000 car, a $150,000 car, and probably get some people to buy it. It's a $30,000 car, $40,000 car, potentially a $50,000, $60,000, $70,000 pickup truck, which is likely to come with Tesla in the future. Those are the cars that lots of people buy. And we see here Model 3, Model X production up just 79%. We were sitting at 128,000 vehicles in Q3. Now we ticked all the way up to 228,000 last quarter. We're at 204. Total production coming in at 237,000, nearly 238,000 vehicles in the Q3. That is up 64% year over year over at Tesla. Now, in terms of deliveries, so they make the cars and they deliver them, all things being considered, relatively equal. In fact, we see the Model S and X deliveries actually came in at 9.2. So they produced 8.9, but they actually delivered several more than that. So very, very, very strong operational performance as well. Now, you do have this solar business as well. I do see that declined quarter over quarter, and really over the last quarter, that's kind of declining. The storage deployed, which is kind of an interesting business model where you're storing solar energy or maybe even traditional energy as well, that has ticked up over the last few quarters as well. And so you like to see that. I think that's kind of a hidden business with Tesla. Whether or not that the solar and the solar storage ends up becoming big, I don't know. I just know if it does become a big business, let's say it starts printing $1 billion, $2 billion, $3 billion a quarter to the bottom line. Well, this stock's way under, I'm telling you, it's way undervalued if this solar business starts humming over at Tesla. Now, the other thing that I think people ignore with Tesla are these supercharger stations. I just drove from California to Nevada in a Tesla, and I don't think you could have comfortably done that in any other electric vehicle, and that is because Tesla has more supercharger stations than any other EV maker combined, okay? They've got over 3,000 of them. That's up 49%. This is a moat, okay, around your business. This is also potential revenue, because what are the other EV makers? Mercedes is going to come out with an EV, or they've got the S-Class that's coming out here. Other EV makers, other EV cars obviously exist. Well, they're not going to have access to the supercharger network. They're going to either have to build that out themselves, which is super expensive. They're not going to do that, okay? What are they going to do? They're going to license and lease from Tesla. That's going to be another revenue stream coming in here very shortly. Now, this is always an interesting part of the slide. It is showing you out in California, their current capacity for Model S, Model X, that is 100,000 cars. Model 3, Model Y at 500,000, but they have 2 new factories coming online. Well, first of all, I'll talk about Shanghai, which is China. That should be 450,000 cars and could be even greater than that once it gets to full capacity. And what they'll use for that Shanghai is not only to deliver Tesla cars in China, but they'll be able to export those cars around that region as well. But also what's coming online here very soon will be Berlin. That is going to produce the Model Y. And the timeline here is that Berlin is going to first produce the Model Y, and it likely will become before the end of the year. And then you've also got the Texas factory coming soon. That is going to first start with the Model Y, and then they are going to manufacture the very, very highly anticipated Cybertruck as well coming from Texas. But first will be the Model Y. So once you start seeing Model Ys roll off, and my guess is Tesla will give it at least a quarter, maybe 2 quarters, where they're printing Model Ys out of that facility, then you start getting this Cybertruck, which I think is going to be a very, very big product. I don't necessarily think they're going to do huge numbers in it, but it's literally a $50,000, $60,000, $70,000 pickup. And when you look at the price for the electric Ford F-150, even just a fully optioned Ford F-150 traditional gas, I mean, those cars, those can be $70,000, $80,000 for a pickup truck. This will be a very, very affordable pickup truck, and I think one consumers will latch to. Not only that, the range on the Cybertruck was really, really big. So if you wanted to have a Tesla with a long range and have it be under maybe $60,000, $70,000, well, the Cybertruck will definitely be a good product. Now, they've also got this Semi, which is, I think, still in testing. They've got a Roadster, and this future product, I believe, is a car underneath the Model 3, which should be south of a $30,000, maybe even $25,000 price point. I tell you what, if Tesla can produce a $25,000 electric vehicle and have gross margins in that 25 to 30% range, again, this company is way undervalued considering the opportunity that it has coming forth to it. Now, full self-driving, I'm not necessarily going to go over this. There's plenty of other people out there that know more about the self-driving, but they do have this new battery that's coming, this 4680. Not exactly sure if that's how they call it, but this is a different battery. It allows the cars, I believe, to charge a little faster. Me personally, I have 3 Teslas on order. I have the Cybertruck. I'm the most excited about that. Unfortunately, I'm going to have to wait probably another year or two, I'm assuming, for that. I have a Model 3, which I'll have by next month. I'm going to take delivery of that as soon as I possibly can get it. My family needs a second car. I have a Model Y on order as well. That is scheduled to be delivered to me either in January or February, but I'm going to wait. I'm going to hold my reservation. I'm going to wait for the new battery in that Model Y because I like the new technology that they're working on there. This goes more into their energy storage, their solar roof business, also their insurance. So when you register for a Tesla, you get a loan for it. They run that out through third parties. The interest rate I got on my Model 3 was like a 2% interest rate. It was ridiculously low. I mean, you obviously need really fantastic credit to get an APR that low, but I was very, very happy with that. But the other thing is you can get your insurance directly through Tesla. So I thought that was interesting. And they just introduced this score where they monitor your driving, and they're going to be able to adjust insurance premiums to get a really accurately reflect your odds of getting in an accident. And so I think they're going to be able to drive insurance premiums lower. And that's an interesting product over at Tesla as well. Now, in terms of volume, they say they expect to achieve 50% average annual growth in delivery vehicles over the next multiple years. This is the other thing that's important with Tesla. No more fundraising. This company has sufficient funds to fund their roadmap, long-term capacity expansion plans, and other expenses. This company is no longer in fundraising mode. That should be music to your ears as a shareholder. Now, here's the thing that absolutely blew me away. Profit. We expect our operating margin will continue to grow over time, continuing to reach industry-leading levels with capacity expansion and localization plans underway. So these margins, which are already, like they accurately say here, are industry-leading. I mean, just pull up GM's operating margins. They're a disaster, okay? Pull up Ford's. They're probably even worse. Tesla blows them away, and they think they're only going to get better. That is very, very exciting if you are a shareholder. Now, here's some eye candy here. Here's the Gigafactory in Berlin. Looks pretty darn good to me. Elon Musk has indicated there's a lot of regulatory red tape that you have to cut through over in Berlin. He thinks this thing should have already been kind of launched, but he has to constantly be cutting through red tape and maybe holding a county fair, which it looks like what they're doing here might get them in the good graces. More eye candy here. Here's the Gigafactory in Texas, and they're rolling out Model Ys there. Again, the Model Y, once you start seeing Texas roll out a fair amount of Model Ys, then I think you're going to see the Cybertruck follow very shortly. Not in mass numbers, but eventually you'll start seeing that Cybertruck roll out, and that should be exciting for shareholders as well. Here's Gigafactory Texas as well. And here's the other reason why I'm showing you these photos. Not because I want to take up time here on YouTube, but think about this from a shareholder perspective, okay? Yeah, there's Lucid Motors. Yeah, there's all these other, EV. Rivian, I think, is going to go public here in a minute or two over on the stock exchange. Do they have this? Look at where you have to be to reach Tesla's scale. Look how big these buildings are. Look how much money this has. Look how much money you have to pour into this. And Tesla's not that young of a company. Here's the Shanghai factory. They're not only doing this here in the United States, they're doing it in other parts of the country, other parts of the world, excuse me. It's just incredible. Look at this. This is more inside Shanghai factory as well. This takes a ton of money. It takes a lot of skill. And it takes a lot of patience because you can't just scale up to this right away, at least here in North America. Maybe automakers like NIO and Li Auto, maybe they're able to do that. But man, it's impressive. Here's more graphs just showing you, look, things are just moving upwards with Tesla. And it doesn't look like things are slowing down. Now, broader look at the financial segments. We have gone over these a little bit already. I will show you just a couple different things. Here's our gross profit coming in at $3.6 billion off of $13.7 billion in Q2. In terms of total revenue, we're sitting just under $12 billion. Then we take that all the way up to 13.7. And so we are growing that. Here's our income from operations coming in at that $2 billion. We were at $809 million last year. Now, here's the balance sheet. They talked about having plenty of cash on the balance sheet. They've got this $16 billion. Here's this digital asset. I think this might be their crypto, okay? It started with 1.3. We're at $1.2 billion worth of crypto. Obviously, if Bitcoin keeps going parabolic, will help the company out. But in all things being considered, it's basically kind of a rounding error. In terms of debt on the company, not a lot, okay? This company is financed by issuing shares of Tesla, which has worked for Tesla, okay? Tesla's had a lot of hype. They've got Elon Musk. They've got a lot of people believing in this company, and for great reason, in my opinion. It's justified all those people, especially the early investors in this company, it's just absolutely justified their opinion. Well, other EV makers might not be as lucky. They might not have as good a CEO. They might not have as good a story. They might not have as smooth an uptrend. And Tesla's uptrend has not been smooth at all. There's been lots of bumps along the way. They've been able to raise money constantly by selling Tesla stock. In fact, in the early days of Tesla was far better at selling Tesla stock than they were their own vehicles. Well, now it's totally the opposite, and now they're reaping the rewards along with shareholders as well. This company is nearly debt-free, and they could go to any bank around the country and borrow tens of billions of dollars if they needed to. Now, last thing I want to show you is coming down here from the automotive growth. So I talked about automotive gross margin, okay? That was at 30%, and that's in the press release because it looks really good, right? Okay, 30% gross margin. Last quarter, we were at 28.4. Last year, we were sitting at 27. But, that does include the regulatory credits, okay? So that doesn't necessarily mean it's for every car that they sell. So I want to strip that out, and I like how they do this, and it's all the way at the bottom, okay? Sometimes the best information, in fact, oftentimes the best information in a company's financials are down near the bottom where nobody looks, okay? And this is where you find the little nuggets that make your investment confidence go up even more because you dug through all these numbers and you found the golden nugget down here. Take a look at this. So we're going to subtract these regulatory credits. And we see here, it's actually getting to a very small percentage. We were sitting at 4% pretty consistently. Last quarter, we were sitting at 2.6%. Now we're sitting all the way down to 1.7%. They're running out of these credits. And take a look at this. Here's our automotive gross margin excluding regulatory credits. So this is strictly making Model S, Model X, Model 3, Model Y, and any other car that they potentially make as well. Take a look at this. 28.8% margins. Last quarter, we were sitting at 25.8. Last year, we're sitting at 23.7. We are doing absolutely phenomenal Just absolutely phenomenal over at Tesla. Now, what's also phenomenal is the stock chart. We've been calling this for a while now. Once it broke above some key levels here, it just became very painfully obvious that this stock was headed in this uptrend. In fact, we've got this channel here. We could probably drop this bottom channel down just a little bit. And so we are in the upper end of this channel. I'd actually expect some selling pressure over at Tesla to come in, and that's exactly what we've seen. The stock was up over about $880, and it's pulled back. Now we're closer to about $860. No big deal. In fact, if you pull all the way back down here to $817, and our area of support here at we'll call that $800. Just keep the numbers round. No big deal. If Tesla pulls all the way down to $800, my opinion, probably a buying opportunity for this stock. Now, we are fully expecting this stock to break these all-time highs at some point. When it is, I don't know. Could be as soon as next week, honestly. Get up above $900 per share, and hello, 1,000's in play, 1,100. I mean, the sky's the limit. Once you break these all-time highs, go look at the Netflix chart, and there's a couple other charts out there where when you break above all-time highs, the stocks tend to run, and we would expect that with Tesla. Guys, that was the Tesla video. Just up 2,000% over the last 5 years. I wouldn't necessarily expect this type of performance over the next few years, but this is an $860 billion market cap company that I think it's well on its way to $1 trillion market cap. That's a solid 20% higher than where it's at right now. And if you don't own shares of Tesla, I think you might want to jump on the bandwagon here pretty soon. That was Tesla. Leave me a comment down below what you think about it. I'd love to hear from you. We'll be back again soon, again with more here on the Investor Channel. Good luck with your investments.